Hi, Kevin Jaramillo here with Affinity Homes. Today we're going to be talking about reverse mortgages and what the difference is from today versus 10 years ago. Today I'm with Annette Mansfield with Fairway Independent Mortgage Corporation. So Annette, tell me, the question I get a lot is, does the bank own your home?
No, the deed does stay in your name. You do have certain things that you have to follow the terms of the loan, which is to live in the home more than 6 months out of the year, pay your taxes on the home, pay the insurance on your home, as well as maintain the home.
So to me it sounds like it's pretty much the same as anybody else's mortgage, but mainly you just got to live in it and take care of it.
Correct.
So what is another thing, people just have anxiety even to looking in it, I think, because people were getting hurt in the past. What has changed?
Well, it's basically the fear of the unknown. They were really bad mortgages back then. Now it's guaranteed by the FHA and HUD, so they are guaranteeing the loan. It is a non-recourse loan, so they do not come after the owners or the heirs of the home, again, as long as they keep to the terms of the loan.
Great. So no more fear of the bank's going to take my home.
Correct.
Because I know people do research on the internet, and there are people out there saying that, hey, be careful, the bank can take your home.
Correct.
But really, the bank can only take your home, same as a standard mortgage, FHA, VA, if you don't pay your taxes and your insurance.
Correct. Correct. The only two differences is, again, you need to maintain it as well as live in the home more than 6 months out of the year. So that's the only two things that are different from a standard FHA, VA conventional loan.
So Annette, my next question is, can I outlive my reverse mortgage?
No, the reverse mortgage will never be called unless, one, you sell the home, pay off the reverse mortgage, move out of the home permanently, or the last person on the mortgage passes away.
Excellent. I'd asked earlier, does the bank own your home? We know that they don't. But can the bank take my home?
Yes, absolutely, they can take the home, but it's just like a standard mortgage. If you don't pay your taxes, the bank can take your home. With the reverse mortgage, if you don't pay your taxes, if you don't keep it insured, if you don't live in it more than 6 months a year, or if you don't maintain it, it can be taken away, but it's 4 simple steps to the terms and condition of the loans.
So Annette, that sounds like a win-win to me. But let me ask you, so what happens if I owe more on my home than it's worth?
If the market changes and you are in a deficit with the home, that's where the FHA steps in. It's a non-recourse loan to the owners as well as the heirs of the home. Once they either move out or they pass away, it gets handed down to the heirs and they have an option to buy the home at 95% of appraised value.
Sounds like they have some nice built-in mechanisms to protect
Yes.
the people from years ago, right?
Correct, yes.
That's when the predatory loans kind of took advantage.
Right.
So how can someone take advantage of their equity for long-term care purposes? Can you get a reverse mortgage for long-term care?
Yes, that's one of the best ways right now that people are taking out the reverse mortgage is to help them with health care. They no longer need to move into an assisted living or a nursing home. They can stay in the comfort of their own home and have the professionals come to them and give them treatment 2, 3, 4 times a week because they no longer need to pay the mortgage on the home.
So thank you, Annette, for a lot of great information. For more details, contact me, Kevin, at Affinity Homes at the number listed below. We'll talk to you soon.